let's get into the top performing ETFs of 2020. Okay, so from the bottom up, we got here OGIG. That's O'Share Global Internet Giants. So if you want to invest in tech stocks, you can do worse than simply going after the trillion-dollar big guys and ignoring the up-and-coming who are left to fight over the scraps. Short investors are often enticed by scrappy companies with long-shot hope of becoming as dominant as Amazon, Microsoft, or like Alphabet. So that's Google. The hard reality is that these mega cap tech stocks have so much cash in the bank, such dominant market share, and a downright ruthless approach to eliminating the competition. Just about the only risk they face is government-led breakup. And that seems highly unlikely in the near future. As a result, OGIG has surged on the continued dominance of these big internet and tech names in 2020. The fund comes with an annual expense ratio of 0.48 or $48 for every $10,000 sorry, invested. Okay, so a 109% return is pretty good. Now I think that this is kind of false. I have here at year-to-date return of 97%. Although, yeah. Alright, so anyways, let's look at what they hold. OGIG. Alright, so their top holdings are Amazon, Baba, okay, Google, Tencent, Facebook. Alright, so pretty much the biggest of the biggest. I don't see Netflix or Tesla. Interesting. Okay. So this is a pretty good return for just the big companies. And really solid companies actually. Yeah, not bad. Alright. So the next one is at 9. Coming in at 9. We got, let's go big. Alright. Okay, so we got ARK F. So that's ARK Finance. That's the fintech innovation. Currently at 50 and 36 cents. And yearly return of about 99%. This is kind of updated. So anyways, what I have here is 99%. That's pretty good. 99% with an expense ratio of 0.75%. So that would be $75 for every $10,000. So let's look at what they hold. So ARK F, which might be their second smallest or the second worst performing ETF. So ARK has 5. So let's get in here. Okay, Square, Pinterest, Mercado Libre. I believe that's a South American payment service, I believe. And then we got Zillow. Okay, the real estate website or company. PayPal, Tencent. Okay, Alibaba Group. Okay, Alibaba is not doing so hot right now. Jack Ma apparently hasn't been seen or heard from. Hopefully he's doing okay. Alright, so the next ETF at number 8 is it's LIT. So that is Global X Lithium and Battery Tech. So now you know in 2020 battery technology has been advancing exponentially, and with the likes of QuantumScape coming out, they have pretty much tenfold, actually more than tenfold if you have invested when it was a spec at $10. So currently it's at about $60. So that's still pretty good. I mean, if you keep holding it, that's a really good company. Alright, besides the point. We got LIT here at $71.34, which is Actually, 7.6% up is pretty big for an ETF. Not surprising. Okay. So their year to date we have here at 104%. So this would be this year. But the trailing 12 months was 104%. And this is doing pretty good, actually. If you look here, we got here. Okay, so we got here. So this is the new year. Boom, boom. Okay, that's pretty good. Expense ratio is at 0.75, which seems pretty common at $75 for every $10,000 invested. So that would be the expense, which is really good. I mean, some people pay way more to have their money handled, and they barely just get 10-13%. And by the way, these companies are beating the market, beating the S&P 500 rate of 13% annual growth. So that is ridiculous. I mean, come on. That's crazy. All right, so let's see what Lithium LIT holds. I'm pretty sure I know. Okay. Albemarle Corp. Never heard of this one. BYD. Okay, that's a Chinese company right there. Samsung SDI. Okay. Tesla. Great. Finally, a ETF that has Tesla. Okay. Panasonic Corp. Batteries, of course. Panasonic. All right, so the others are in numbers, which means they are from a different stock exchange. Okay. All right. And apparently these are top 10 and 56% of the total asset. Impressive. Okay. So the next we got here is called IPO. It's Renaissance IPO ETF. So what's interesting about this company here is that they invest in new companies. So companies that have just IPO'd. And so companies, for example, in 2020, like Zoom has been a really good performer. So yeah. Excuse me. Okay, so right, we got here. Their expense ratio is 0.60, so that's pretty good. Their year-to-date return for 2020 was 106%, so double your money. That's pretty good. All right, and let's see what they hold. So we know they hold Zoom. Okay, they got Moderna, which is a really good stock. Uber, okay. Pinterest. CrowdStrike, okay. Slack, Datadog, and Peloton, okay. So I'm expecting them to increase or invest in the new ones that had just come in December. DoorDash and Airbnb. Sorry about that. Yeah, okay. That should be interesting because I'm expecting Airbnb to come down to like 130s, 120s, hopefully, so that I can get into that position. Because Airbnb has a huge moat, if you know what that means. They are protected, boy. They are easy money play. You know, it's like Apple, easy money play. All right. So the next one is called iBuy. So that's Amplify Online Retail ETF. Okay. So their price is currently pretty high, 116, and okay, that's up on an upward trajectory. Looks like, yeah. Okay. All right. So their expense ratio is 0.65. That's pretty good. And their return for the year 2020 was 115%. That's pretty good. Now, of course, as I keep going on, we're going from 10 to 1. So, of course, it's going to get better. So, yeah. All right. So, let's look at what they hold. Okay. So, I'm expecting a lot of e-commerce. Of course. Okay. There we go. Love tips, Expedia, Uber, Booking, Stockholm. Okay. TripAdvisor group on that. Okay. Interesting. I'm kind of disappointed they don't have Shopify, because Shopify is one of the biggest companies by market cap in Canada, so that's interesting. All right. I mean, it is what it is. Oh, they have Lyft here. Oh, interesting. Okay, whatever. All right, so the next one we have here is ARK W. So ARK W is their next generation ETF, I believe. Yes, I'm correct. Okay. So the next generation ETF. Okay. So I'm familiar with ARK and I know what they hold. This expense ratio is a little bit higher than the other ones, 0.79. And the yearly return for that one, this excuse me, ETF is 146%, which is really good. Once again, way better than the market average of 13%. All right, so in their top 10, they have Tesla, Roku, Square, Slack, Spotify, Teladoc, Grayscale, Beat. Oh, right. So Beat. Okay, so Grayscale, BT. So the ticker symbol here is GBTC, and this is a Bitcoin stock. Excuse me. And if you are, if you want to invest in Bitcoin and in terms of like a stock, you want to invest in Grayscale, ARK, they have 3%, which is pretty big for their ETF. And I'm pretty sure they're going to increase their position slowly. So we got Pinterest. Okay, so that's two I don't know about. All right, so moving on, we got ARK KK. Oops, I forgot the R. Oops, come on. There we go. Okay, so this is ARK Innovation. This is their main ETF. And they have the most asset, or in terms of asset invested in this ETF. So I was actually looking at ARK K when it was around 70 something, when I was around here. And then we had that dip twice actually. And then, it was actually doing really good. I mean, you know what? Actually, I might just put some money in this one. On this and the next one that's coming up, I'll tell you which one. Okay, so their expense ratio 0.75%. So this had a return of 146%, which is once again really good. And I don't see this ever like doing worse than the S&P 500 of 13%. I mean, come on. I don't. ARK ETF has been outperforming the S&P 500 for like a few years now. So I mean, people, come on. If you don't know, get to know. Okay, so I know they hold Tesla 10%. All right, so let's see. Roku, next generation ETF, Invitae, CRISPR. So Kathy did say that CRISPR the genomic space would be the next, like Tesla, like would have that kind of effect, like it'll jump that high. And then we have Square, Slack, Teladoc, Protolab, Zillow, Spotify. Okay, I'm familiar with all the companies here. 52% of the total asset. Okay, all right. Let's try to make this quick because I think this is going to go a bit too long. Okay, so the next one we have here is PBW ticker, Invesco Wilderhill Clean Energy ETF. So just want to mention it again. Clean energy ETF, batteries, and the genomic space. It's going to do really well in 2021. Like, do your research, do your homework. And when you get that conviction, that you can't get from just like people telling you on YouTube, like, oh, buy this, buy that. Like, when you do your own research, look at the financials, look at what like the catalyst, and like what the company has going down for them. Like, you get the conviction, you like yeah, I mean, yeah, you know. Okay, so the ETF here, wow, this one 172%, that is amazing, and a 0.70 expense ratio. Okay, this is currently doing better than ARK on the current yield right here. Okay, I might have to look into this more. All right, getting distracted. Let's get to the point here. Okay, top 10 holdings here. We have Fuel Cell. I'm invested in Fuel Cell actually. Neo, invested in Neo. Blink Charging. Now, Blink Charging is interesting because it's a good company, and yeah, it's a good one. People, look it up. Plug Power as well. Sun Power. Okay, I don't know about that one. Candy. Okay, I used to look at Candy, but kind of lost interest in that one. Okay, so the next one we got here is the top dog of ARK Genomics. Okay, so currently at 94.38, doing pretty good. Expense ratio of 0.75, and a year-to-date return on 2020 of 184%. People, that is crazy. Holy cow, Jesus, that is ridiculous. And they have a 4 billion net asset. That's crazy. That is crazy. So if you look, wow, 35. God damn. If you had invested here, I don't want to play this game like here. If I invested, let's just move on. Okay. So the top holdings we have here is CRISPR, solid company. Arcturus. I hear Kathy would mention a lot about Arcturus Therapeutics. Invitae, Pacific Bioscience. Now, what's interesting about PACB is that there's a new penny stock. I mean, not new, but like new to me. It's a penny stock. It's called BNGO, Bionanogenomics. If you don't know, please look it up. Do your homework. This company shot up 400+% in the past week. It's currently on a pullback right now, so this might be a good opportunity to get in. From my perspective, I am heavily invested in BNGO because their product outshines, like, it's better than what PACB is offering. So people, look it up. Okay. I don't know the other one. Okay. Yeah, but okay. And so this was number 2, and the number 1 stock, ETF, best performing is Invesco Solar ETF. Take a symbol TAN, guys. Holy, this one, 191% year-to-date return. And a pretty lower than I expected, actually. Expense ratio of 0.69. That's pretty good. But holy cow, guys, 1.191%, almost double, triple your money. That is crazy. Now let's look at what they hold here. Okay, so this is 61% of their total portfolio. So the number 1 is Enphase Energy, and then we got Solar Edge, and then First Solar. So this is a solar ETF. So all of them is gonna be in solar. All right. So this is a Chinese company. This one around. Okay, I don't. Okay, SunPower. I don't know most of the companies here. I'm not gonna pretend like I know. Some of these are numbers, so these are probably in the Asian market, like Hong Kong, probably. Or maybe the Japan, Tokyo market. Okay, so that was it. This is TAN here, Invesco Solar ETF at 106 is the best performing ETF of 2020. Now these are high risk, high reward kind of ETF. In my point of view, maybe not so for ARK, because I believe in what Cathie Woods is doing. So yeah, so I think this is gonna be, oh my god, okay, 20 minutes. All right, so let's just end it here. Hopefully you guys gained some knowledge. Hopefully I taught you something. Please like and subscribe. That will help me a lot, reach more people. Yeah, so let's just cut it right there. Thank you so much for watching, and enjoy the rest of your night. Take care. Bye.